there's a new really good guaranteed lifetime income annuity that just came on the market. But the reason you'll probably never hear about it is because it pays less in commissions than most others. I know, I'm sure that that's not surprising to anyone that would be the reason, but for most truly independent agents and advisors, for fixed index annuities, which is what we're dealing with here, most insurance companies will pay roughly the same commission, which makes sense when you think about it. It's a competitive marketplace, and unfortunately, part of what goes into the decision of whether or not an agent or advisor is going to even learn about and represent your product is how much that agent is going to get paid. So over time, most insurance companies have settled into paying just about the same commission as others. But let me give you the scenario that I just found myself in when helping one of my clients. There are 3 guaranteed fixed index annuity products that I'll mention here. We'll just call them Option A, Option B, and Option C. Now, I've been working with this client for months, designing and refining their overarching holistic plan. This is just one piece. They were unable to qualify for a comprehensive long-term care policy, so we made sure to filter for those guaranteed lifetime income annuities that would provide them with some supplemental long-term care type benefit should either of the spouses end up having a claim. With that, they were going to go with Option C, which offered the highest guaranteed monthly income and the most attractive version of that long-term care type benefit. We completed and submitted the application. But then, in a review conversation a couple weeks later, we discovered that when we removed the filter for that long-term care type benefit, a new, much higher paying guaranteed income annuity had become available to them, or at least it had moved up significantly as far as what it was offering, what it was contractually going to guarantee now. That was Option B. Although it did not have that long-term care type benefit, it was offering a monthly payout of more than $500 over the one that we had just submitted. So more than $6,000 a year extra that they could be receiving with this one. It was about a 10% swing. We ran the numbers and compared the options side by side, and they decided ultimately that Option B was going to be in their best interest for the short and probably still long-term as well. I notified the company of Option C that we were no longer going to need that contract. We canceled that one. But I informed the client that I was not yet contracted with the company offering Option B, and that unfortunately, potentially for me, Option B was only available exclusively if I were to be able to get a contract with one specific marketing organization. Now, because it's important to me to maintain our firm's independence, I will never agree to be a part of a marketing organization or any other firm that will require me or my firm to reach some sort of minimums to sell a certain amount of their products or to in some way be more exclusive to them. I'm exclusive to whatever is in the best interest of my clients. So there was a risk that I was not going to be able to personally help them with Option B. But I did acknowledge that given their situation with this new information, it was indeed the best option for them. So we had the discussion that if I was unable to get Spicer Capital set up to represent Option B, I would work with the company to help my clients find an agent who could help them get that all set up. And I would coordinate all of that for them. After all, they were still my clients to whom I had a fiduciary responsibility. Fortunately for us, we were able to get contracted with that other organization without having to make any compromises to our independence. And we were on our way again to completing an application in order to get the deferral clock ticking for this couple's guaranteed lifetime retirement income stream. Enter Option A. It's been a bit of a roller coaster. We're just trying to be honest and find the best solutions for people. Anyway, Option A had not even had an income rider before. This AAA rated company, and by the way, there are not many of those, had just decided to slap an income rider on one of their accumulation or growth-focused annuities, which is a rare but great for the client thing. I called the marketing organization that was helping me with Option B to explain the bad news, that we had just found a slightly better option and unfortunately for them, would not be moving forward with that solution that they had helped me get all set up for. I felt bad, but it was what was right for the client. The representative there, who's a great guy, went on to give me a long list of all the reasons option B would be better. I listened because I sincerely wanted to know, but almost all of what he said was just him trying to preserve the business, which makes sense, I guess. That's his job. It's my job to sift through and discern that for clients. But one thing that he kept saying was that, quote, "No way this guaranteed income annuity would last long on the market," end quote. After the third or fourth time that he said that, I stopped him and I told him that I just couldn't understand that at all, unless I was entirely missing something. I was looking at the numbers right here, and not only was it slightly outperforming option B from an income perspective, but it was a growth product. It had way higher prospective returns, way more exposure to the S&P 500, with still that same zero downside they couldn't lose, for example. And it was a higher rated company. I mean, both are good companies, but this one had one more A. Also, the surrender charges were way less, the lockup period was shorter, and on and on. This was actually the case for almost everything that we could compare with these two side by side. Option A came out on top, even if only slightly sometimes. He said, you ready for this? He said, no, you're right there. The reason it won't be around very long is because it just won't sell. I was lost, and I told him as much. Then he said, the commissions are lower. I hadn't even thought to ask. Turns out when I compare what our firm would have made on option B or C, we'll be making more than $10,000 less by helping our client implement option A. But it's the right thing to do. And there's nothing more important to our relationship with our clients than that they trust us to do the right things for them. I mean, we're going to be guiding them through retirement, which means we will likely have a 30+ year relationship with this couple directly, and then hopefully with their children after that. That's worth way more than $10,000 to us. So although I could see it being impactful to a small degree, I was skeptical that it would actually impact the long-term success of this, what appears to be, amazing guaranteed income solution for many people. But my contact there helped me understand that most of the agents he works with would find any reason to not recommend this particular product if it meant that they were going to make that much less. And that, as such, he was convinced it would not be around for very long, that eventually they would cancel it because nobody was selling it. In fact, he said that this company had tried to do something similar in the past and that it had not been long-lived. And he was surprised that they were trying again with this lower commission. Anyway, yeah, that's obviously not right. And if you're curious to see if that's what's happening to you, feel free to email me the details of your situation. All I would need is an investment amount, your age and your spouse's age if applicable, and the number of years you would like to defer before turning on your guaranteed lifetime income. With that information, I can easily plug it into the different annuity aggregation softwares we pay for and tell you which companies are coming out on top. A woman just took me up on that last week. She told me the company that the advisor that she was working with had recommended. I could have easily told her some reason she shouldn't have gone with that particular company, kind of like what that salesman from the marketing organization was doing with me. But when I plugged in her information, I found that same company was, in fact, the one that I would have recommended myself. So I told her as much. I just solidified her as a client for someone else. But just as often, that's not the case. And there are some amazing guaranteed income annuities out there right now. To see how much income you could buy with $500,000, for example, check out this video. And yeah, feel free to send me that email or to click on the link in the description to get on our calendar. I would love to help however we can. I'll see you soon.